Hey guys, welcome back to another video on NAT. My name's Adam, and today I'm going to be talking you through the positives and negatives and pretty much the risk reward of owning NAT. And so we're just going to go over the main points first if you just want to listen to that, and I'll explain more in depth in following the main points. Okay, so on the positive side of things, fleet size for tankers are reduced globally. Um, Rates should go up in the winter, and by that I mean spot rates. So pretty much oil tankers will be earning more as demand gradually increases. Rates also should go up once pandemic is over because that also pushes up demand for oil and oil transport in general. And also there's lowest new building order in over a decade, right? So pretty much that just means that eventually more tankers will exit the market as they're scrapped versus tankers that are actually built, right? So if there's less tankers being built and more tankers being scrapped, that'll decrease the supply of tankers and also push the spot rates up. Now, this is all medium to long term. These positive side of things, and also the negative side of things, especially the first one. So China and USA's climate initiatives. So recently China made a pledge to go carbon neutral in like 20 to 40 years, I think, somewhere around there. And for example, US said that, or at least California said that they would ban internal combustion engines by 2035, I think. So again, that's again more longer term outlook is that of course there's going to be no market for tankers eventually. Spot rates may be depressed for a long time if demand does not recover, or like we're experiencing, we have a second May wave and demand for oil and oil transport is decreased, and also we may have reached peak oil demand, right? Also, I thought that this one commentator on Yahoo Finance talking about NAT. So just some background before I get into this quote is that NAT recently just purchased two new ships. Insiders have been buying shares at around like the 350 range, and right now the stock is trading at $3.30. And also they received financing from a company for their two new Suezmax vessels, right? So this guy is saying this stock is so weird. Insiders are buying, stock goes down. New ship purchases, stock goes down. Company provides finances for the ships, stock goes down. I wonder what can boost it. Maybe one of SpaceX rockets can choose to land on them. That can make the stock price $5. I think that's hilarious. So Elon, if you're watching, please, just to give some NAT some love, make sure that you land one of your reusable rocket ships on one of the NAT Suezmax tankers. That would really help the stock price up. Maybe then it can go to $5. I just thought that was funny. A little bit of comedic relief about the situation that we're in. Okay, so again, we're gonna go through these positives and negatives throughout this video, and I hope you enjoy that. So first off, I mean, look at this 6 month chart, right? We're just, down by like 35%, 36%. It's like the lowest it's ever been in 6 months, trading right now at $3.30 a share. On October 16th, the CEO's son bought shares at I believe is like around $3.50. It was trading around there. And as we can see, the PE ratio is just absolutely disgusting. It's like, it's so low. I mean, I honestly, if I had no shares of NAT, I might even get in now, or even fro. But I mean, it's just incredibly low. And we look at the forward dividend at 16%, which is decently high. And we're looking at a company, honestly, that doesn't have a lot of percentage of shares that are shorted, right? So only around 9% of shares outstanding are shorted from NAT compared to something like Nordstrom, of which I think around close to 40% of their shares are shorted, right? So, not bad. And of course, part of the reason why NAT stock is trading at like $3.30 right now is because, like, look at this. The spot rates for the Suezmax vessels on Monday, $600. October 20th, the spot rate's not doing much better, as we can see, $400. And I mean, part of this is reduced oil demand because of the second wave. Part of this is because all of the floating storage is offloaded already, so now there are more ships that are ready to be used. And here we're just going to go over a little bear report that I found, which is actually really interesting and sort of goes over some of the main points in my little note section at the beginning, right? So first of all, tanker order book is at a 23 23-year low, which we can see right here, August 20th. This was written in the past month. We can see that, you know, percent of fleet tanker order book is like nearing its lows pretty much in over 20 years, right? So again, that's a good thing. So the tanker order book has dropped to a 23-year low, according to data from Clarkson's. In normal times, a 1% increase in global crude oil market growth would have implied an additional demand of about 25 VLCCs, which can store up to 2 million of barrels on their ships. However, this has declined. The only thing, though, is the number of tankers delivered in 2020 has exceeded the number scrapped, according to data from Vessels Value. As a result, the fleet size is actually the largest in at least 2 years. So as we can see here, that around like 2 tankers have been delivered, but actually none have been scrapped, right? So that's why the fleet size is actually the largest in at least 2 years, which would also depress the spot rates and depress oil tanker earnings, right? As we can see here, obviously the fleet size has just increased, you know, in the past 2 years. So again, no wonder that spot rates are depressed to like $600 or $400 this, you know. And I don't really want to talk about anything here, but here they're saying that pretty much we might have already reached peak oil production, as we can see here. Of course, compared to 2012, we just started ramping up production, hit a peak at around, you know, January of 2020, and then just decreased from there, of course, because of the pandemic. And I mean, for longer term, even energy companies such as British Petroleum say that global oil demand may have already peaked in 2019 and that oil consumption may never recover to pre-pandemic levels. So 2 of its 3 scenarios show oil demand dropping by over 10% by 2030, and the most conservative scenario shows oil demand leveling off for the balance of the decade before declining further, right? So here we can see that business as usual, you'll see, you know, slight decrease in oil demand. But if we're trying to do net zero emissions, which many countries and many companies are trying to do, we might see a rapid decline, and we might have already seen peak oil demand, which of course would put the oil tanker market out of business. Okay, and here shows that fossil fuels are pretty much expected to decline, whereas renewables and electricity, as a share of total final consumption, are going to be increasing, right? So this guy is saying that the demand for outlook for tankers to transport crude oil has changed dramatically as a result of the pandemic. Very true, as well as the expected transition of major oil companies from oil and gas production to renewables. I expect the tanker industry is at the start of a long-term decline. Of course, I generally agree with his point. However, I do think that a lot of people who are down on NAT should not sell at this moment, because I do think that there's going to be huge fluctuations within the next 20 to 30 years that will punctuate the decline in the tanker market industry, right? Also, this guy says that he's short. He says he's short NAT, right? So it's in his best interest if the stock price of NAT does go down, okay? Next one. Here has a little bit more of positive outlook, saying that tanker market fundamentals could turn positive as supply is down on most classes. So of course, tanker supply is edging near a 5-year low in many segments of the market, which could bring positive news for tanker owners in the midterm. Okay, so we're saying a potential market upturn may arise in the coming winter months, just because of the seasonal demand for oil and its derivatives. Right, so that may be good news in the mid to longer term. And we can see also one of the more positive things is that NAT just bought 2 ships, right? And also the price to build a Suezmax has actually never been lower coming into September, right? So as we can see in January of 2020, it cost like $62 million to build a ship. However, in September, now it's costing $56 million to build a ship. So that's good news for NAT, is that they probably got a good deal on building their two Suezmax ships, right? Which could mean pretty much that the order book is at its lows in a really long time, right? However, now it may be, this article is pretty much saying that it may be a smart idea to actually order new ships at their lowest price, because when and if the oil demand and oil transport industry does recover, which I am banking on, of course, because I am long NAT, so could now it could be a good time to actually buy Suezmax and VLCC ships, because they're at their lowest price ever, right, for new buildings. Okay, maybe these are the number of vessels ordered. Maybe these two vessels here, as we can see, have been attributed to NAT. Who knows? Um, Anyways, and finally, here is just talking about tanker market should take note of China's climate pledges. So as we can see here, Chinese oil consumption and CO2 emissions are, have been rising since 2010 steadily. Oil consumption and CO2 emissions. So pretty much, I don't know if they have. I think they said by 20. Oh, so pretty much the challenges that should not be underestimated, but President was now committed 1/6 of the world's population and around a third of the world's CO2 output to achieve net zero emissions within 40 years, right? So by 2060, I guess, right? So again, this is just a long-term trend, and we can see here, California unilaterally bans sale of new gasoline cars after 2035. Okay, um, so this is just the move towards environmental transition, right? However, I do think that in the medium term, the stock could easily oscillate between, like below $3, maybe even like around the $2.50 range to above $5, right? That's just the nature of cyclical markets such as the tanker industry, right? In the next, foreseeable future. So again, what am I planning to do? I'm planning on holding my shares, just because, as we can see here, I do believe the positives will definitely outweigh the negatives, at least at some point in the future, and I am definitely willing to hold my shares and for NAT to go even lower, um, before I see an uptick in the stock price. Okay, again, I'm hoping that happens, and I mean, in the meantime, I will receive some nice dividends, right? Like, we're looking at something that has like a 16% dividend right now. So yeah, that's just my outlook. Of course, I understand that your outlook may be different. Let me know what you think. Let me know what you're doing with NAT. And again, if you like this video, I'd appreciate if you give it a thumbs up. And if you haven't subscribed already, please subscribe for more content. And I hope you guys have a fantastic day, and I'll see you in the next one.